It's always a function of your risk appetite. I've seen people do it and it worked for them, and I've seen people do it and it also backfired. Investment portfolios can be described as classes of different investments that you can have as an individual. We're going to be talking about three things that affect your investment portfolio. Those three things are going to be measured according to the risk that is involved. For every investment you make, they are classified into three. One is the low risk involved in investing. So you have low risk investment portfolios. You also have medium risk investment portfolios. And then you have high risk investment portfolios. Low risk investment portfolios are usually investments that yield, most of the times, single digit interest rates or interest rates lower than 10% per annum. One of those kind of investment types that fall into low risk portfolio are government bonds. That's federal government bonds issued by the government of the day. You also have treasury bills. In recent times, the treasury bills being sold in Nigeria have actually gone beyond 10%. I think sometime this year it rose as high as 25-26%. But in the last few weeks, there's been a decline. Usually prior to this government, it was way lower than that. But typically, treasury bills fall within the 10% region. They are classified as low risk because they are issued by governments around the world and they have a solid guarantee in terms of repaying back your principal that is invested and your interest. The Nigerian treasury bills interest are usually paid upfront. So when you invest your money, they pay you your interest upfront, while the principal remains with the government that they use for business or use to fund projects for the day. The second class of investment portfolio we'll be looking at are medium investment portfolios. Usually we'll classify things like arts. There are people that actually buy arts and store them and sell them or have them, and they could possibly liquidate them or sell them in future. Real estate will also come into medium-term investments. The third one that could come under medium-term investments are possibly private equity investments, so buying shares in private-owned companies. The third class or third investment type of investment portfolio we'll be looking at now are high-risk investment portfolio. Why they are high risk is because they pay the highest levels of interest and sometimes could have the highest risk involved with them. Now, some of the things that will fall into this classification are cryptocurrencies, foreign exchange trading, that's FX trading as some people call it, and sometimes debt notes issued by some private companies. Now, why are these classed as high risk? It's because most of the times they tend to pay the highest levels of interest. Now, experts will tell you if you had, for example, maybe 1 million naira and you wanted to invest in these three things, they will tell you to always possibly take a 10% or 20% and put it into the highest classification, which is high risk, things like FX, crypto, and the rest, and tell you to spread a bigger proportion in the lower risk category and maybe about 20 or 30% in the medium category. Now, for me, I will tell you that it's always a function of your risk appetite. I've seen people do it and it worked for them, and I've seen people do it and it also backfired. If you have a big risk appetite, it's up to you. You could decide that you want to put a larger chunk of your money in high yield investments. It's totally up to you. Are you someone that likes to take risk? If you want to take risk, then you could look at doing high yield investments and medium term investments rather than doing single digit interest rates. I believe that with what we've spoken about today, you could look at these classes of investment portfolios and think about it in the long term, how you want to invest and build a profitable business portfolio.